we have seen some significant changes in the real estate market lately.
And there's also some other changes that might be coming based on some new articles and new information that we're going to go over in this video, and we're getting started right now.
First, let's start on the local market, which is the Venice, Sarasota areas. We have experienced price drops and continue to experience price drops. Many properties are staying on the market longer as well, which is an indicator that the market is clearly changing and that it's leaning a little bit more towards a buyer's market. Not quite in all of Sarasota County, but some areas more than others. Also, there is inventory building, which I have seen some homes being on the market for like over 100 days. And sometimes people wonder what's wrong with the house, why isn't it selling? And there is probably nothing wrong with the house. It's just we're in a changing market. So homes are staying on the market a little bit longer, and it doesn't mean that something is or isn't wrong with the house. It's just in the market we're in right now. We're not, 2 years ago, homes were selling very, very quickly. Within a day, they were already pending, and then within 30 days, they were already sold. Right now, we're not in that same market. People are not waiving contingencies unless you're an investor and you don't mind buying a house as is. And also, there is not as much cash out there right now, and there is not as many buyers, especially buyers that are financing because of the interest rates being at 8% right now. Some people are holding off on buying, or the people that wanted to move down to Florida already did. So I think all of those factors have a lot to do with the increase in inventory, homes staying on the market longer, and prices dropping as well.
So to give a little more clarity and context and everything, we're going to show you Redfin's latest market data, and then also go again over some articles that are going to show you maybe what's going to be coming on the horizon with the housing market, the entire economy as a whole, and kind of how that might factor into what's going to happen. So new listings in the North Port metro, you can see, have definitely went up.
Yeah.
But you can see that's kind of generally what happens around this time of year, except for in 2022, they definitely went down quite a bit.
Another thing too to keep in mind with that is in end of 2021, 2022, we were having issues with supplies, so builders weren't able to build homes. Right now, that's not an issue anymore, so there is a lot more new inventory coming for new builds.
As you can see, the new listing median price is starting to trend up a little bit. You can see it kind of did this similar thing last year and the year before. 2021 is basically the entire year went up, but overall, somewhat flat. It's right around where it was the beginning of the year now versus, the beginning of 2023. And then the actual sales price is sort of a similar story, relatively flat, I guess you could say, for the entire year. So I guess for a lot of the people that were saying, there's going to be this big market crash, we haven't seen that yet. Not saying prices couldn't go down yet. We've always been calling for a correction. And really, if you think about it, if prices are going to generally continue, or actually for them it'd be this way, continue to go up, and it went up way too fast, just it going flat for a while is in essence kind of a drop. In one way, I guess, is if you look at it, if it stays flat long enough.
Yes, and I think a crash would be mainly if most people are upside down on their homes because property values fell down so much. But right now we have seen that homes have appreciated almost double. So even if prices continue to drop, I don't think there will be a crash, or most people wouldn't be upside down on their homes because prices are still up so high.
And actually, one of the articles we'll share with you in a little bit kind of ties in with that whole thing too, with like it's going to be hard for some of these people to be upside down in their homes. You'll see what we're talking about in a second. So let's continue with the median days on market. Like she was saying, she's seen some places on the market for up to 100 days. You can see that definitely ballooned about 2-ish months ago. And now we're back to about what it was in the beginning of the year, sitting at about 30.5 days on the market. But you can also see, that's up quite significantly from 2021 for sure, and still from last year this time in 2022, which near the end of 2022 is when that started to rise, and a lot of that was when interest started going up. And as she mentioned as well, price drops, they are up. So what she's seeing on a local personal level is definitely vindicated here in the data. 9.6% of active listings end up having a price drop. So this is one of the big ones, months of supply. And as you can see, that is finally starting to build again. It definitely did that towards the end of 2022, which was the black line. Pretty crazy in the beginning of this year, then went back down, and we're trending towards that again. So obviously with interest being up, that's probably helping the inventory build. I mean, you're seeing a little bit less demand. I mean, you're still going to have people get a hold of you. By the way, she is a real estate agent, so if you want to move here, call or text.
941-221-1897. Yes, a lot of people are, waiting for interest rates to drop. And also, I read an article a month or so ago that mortgage applications were down like 40%. So that goes to show that, yes, a lot of people that are buying right now are buying probably mainly cash, and that a lot of people are deciding to wait. There's a lot of demand yet, but because interest rates are so high compared to what they were in previous years, I mean, like when we talk to your parents, your dad says they finance at like 14%.
Yeah, 12 or 14, somewhere in there, 16 maybe even. 16, I think he said.
Yeah, so back in the 80s, like interest rates were really high, but with having interest rates at 2%, 3% over the past few years and now being at 8%, that seems like that's really high.
Yeah.
Even though historically it might not be. But I think that's keeping a lot of people from buying. A lot of the people that are still buying are keeping in mind that, like we can make it work for a couple of years, and then in a couple of years we'll refinance.
So it'll be interesting to see how it plays out too, just with, like we said, we don't think there's going to be a crash. And I think for there to be significant price drops, we're gonna have to see that inventory shoot up really high, because I'm sure you've heard of the lock-in effect, right? A lot of people don't want to sell their home either, and they don't want to give up all the equity that they've gained.
Or their interest rate right now.
Yeah, so it's just like, I think we're going to see a cap on how much inventory there can be while interest is where it's at. And I just think a lot of people aren't going to be, unless they're forced to sell at a lower price, will not sell at a lower price. And based on some of the articles that I'll show you, I think a lot of people won't feel forced to sell at a lower price. And you'll see for a couple interesting reasons why.
And even right now, even if people are selling at a lower price or forced to sell at a lower price because of whatever reason, they still wouldn't be upside down. Like they would still be able to pay off their mortgage, whatever's left of the mortgage, and even maybe walk away with a little bit cash on hand, just because, again, property's almost doubled.
And I think one thing to put this in perspective, I know a lot of people out there are like hoping for a crash, because I'm not gonna, deny that, housing affordability has definitely become an issue in the United States. That being said, let's talk about you right now. Are you willing to sell your place at a $100,000 discount, a $50,000 discount? You're not going to just give that away, that equity. Everyone's going to fight tooth and nail to keep every dollar in equity that they can, right? So I think that would be like one of the last things of the dominoes to fall if we have, like, let's say an entire stock market crash or something like that. I think you're going to see other things budge first, and the home equity, I think, is going to be one of the last things to go, again, unless you're upside down.
Yeah, and unless something happens where you must sell, then yes. But then at the same time, all the people that bought in the past few years, at least in Florida, most of them were cash or had like really hefty down payments. So for those people to be upside down on a home, that like we would have to have a really bad crash, which I don't foresee happening. I don't think experts are calling for a big crash either, because you gotta think a lot of people that moved from like California or New York, they sold their homes there, came to Florida with a lot of cash and bought their homes. So I know of some people that bought their homes cash and still had money left over. So that's why we've always said there might be a price correction, not a crash.
And there's turning of the tides in some regards that the articles will go over, that you'll see what we're talking about. And I think a crash is much less likely given some of that data. So finally, I think one of the last important ones to look at would be the average sale to list ratio. Right now, you can get a little bit of a deal, right? It's 97% in Sarasota County, 0.3. So generally, if a place was listed for $100,000, you could get it for about $97,000, $97,300, I guess, if you want to get super technical. But obviously, there's give and take on that as far as, the location, the condition of the home. Some you might have to pay more than asking. Some you might get for that 97, some you might get 90. It's just an average. But you can see that's looking relatively flat for this entire year. A little bit back to normal, though. If you look at the orange line from 2021, it got kind of crazy. Everything was going above asking. All the way through the beginning of 2022 was kind of the peak of it, and then it dropped like a rock when interest hikes started happening. So here's where things start getting interesting, though, with these articles. So according to Walmart CEO, and we just happen to do the CNBC article. If you don't like CNBC, it's in all kinds of different publications because it's coming from the Walmart CEO. And they're saying that deflation could be coming to certain food costs. So in some previous videos, you know, I was talking about how inflation is starting to get under control. And we got some comments from people saying, well, I'm not seeing that difference in my grocery bill. That's not necessarily what inflation getting under control means. Inflation getting under control basically means the amount that the cost of your goods going up is slowing down and getting it to like barely increase because it's expected to increase a little bit. So that doesn't mean that the cost is going down. What cost going down is deflation. So that's meaning like right now you're going to the grocery store, you're getting the same items, it's gonna cost you $100. If there's deflation, it might cost you $75, $50. Well, that's what the Walmart CEO is saying that we could expect to see already this holiday. So I think that's gonna help bring, you know, people's finances a little bit of relief. So now, again, like I was saying before, I think the first things you're gonna see those changes in prices would be costs of things like that you have to buy over and over and over again, like food. Houses, I think, are gonna be the last domino to fall in that equation. So,
and even gas too, we've noticed that gas is coming down. It was under $3 just the other day, and it has been over $3 for a year, 2 years maybe?
Yeah, at least a year minimum. Yeah. Just to go through some of the bullet points, deflation could be coming, the CEO, Doug McMillan, said. Prices have fallen, especially on general merchandise and on some key grocery items. He says, yet the discounters struck a cautious tone, saying customers continue to watch their spending. And also, I know there was like some, you know, cautionary talk in there as far as, you know, deflation could become a real problem as well, because then if people, you know, it gives a sense that there's less demand and then prices fall even further. And then, you know, that could be a domino that could maybe bleed into the housing market, I guess. But ultimately, again, like I said, I think a lot of people are going to fight tooth and nail to keep every bit of equity, and they're going to take relief where they can get it and not give up their equity. So hopefully this will bring some relief. Now, the other article, I think, is another interesting one that ties in a lot of what she was saying before, as far as you're not going to be upside down in your house if you paid cash. Well, Business Insider says the housing market is historically unaffordable, but a record number of Americans now own their home without a mortgage. Hard to go upside down unless you can't afford your tax bill or like insurance if you choose to get it.
You can't, yeah, there's no way.
Where's the crash gonna come from? So let's go through a few of the bullet points. The share of US homes without a mortgage jumped 5 percentage points from 2012 to 2022 to a record near 40%.
Wow, that's much higher than what I expected.
Yeah, and in Florida, it's probably even higher,
yes.
Honestly, with so many retirees and snowbirds and people that
sold and bought here.
With cash.
Yes.
So, and then more than half of the homeowners are at retirement age. So there you go. That's pretty much proof. I mean, Florida's retirement central. Historically high mortgage rates and home prices have kept many Americans sidelined from the market. So definitely a factor though.
Let us know what you think of these articles and what you think is going to happen with the market. If you're looking to buy or sell a home in the Venice, Sarasota areas, make sure to call, text, or email our team, 941-221-1897.
Call or text anytime, whether you're looking to buy or sell in the next few days, the next few months. We'll always have your back. We hear from people all the time, and we love it.
Make sure to subscribe to catch the newest market updates and
live breezy.